We now move to our next panel session, which will concentrate on collaborating with leading international financial centres. And the topics that we'll be looking at will be perspectives from other major international financial centres worldwide, such as those in Asia, Europe, and the Middle East, highlighting the importance of collaboration and shared priorities in a rapidly changing world. And also examining how the UK can collaborate, because the nature of the relationship between IFCs is that we are both competitors and collaborators. So how we can collaborate with those centres, including shaping rules on shared priorities like digital assets and sustainable finance. And we have a terrific panel led by Sir Edward Braham, the chair of M&G and the chair of the City UK's International Financial Centre Group, Janina, Heinz, partner at Freshfields, Cora, McLaren, Managing Director of Large Corporate Coverage London and South HSBC, and a member of the City UK's Next Generation Leadership Council, Joe Moynihan, the Chief Executive of Jersey Finance and a board member of the World Alliance of International Financial Centres, and Patrick Chi, the Chief Technology Officer at Greenlink Digital Bank. Can you please welcome them to the stage?
Right, good morning everyone. I chair the International Financial Centre Group, as Miles said, and our role is to help policymakers and industry understand how global finance is changing and what that means for the UK as an international financial centre. No prizes, we are living in a world that feels very uncertain. Capital still moves across borders, but geopolitics matters more. Technology matters more, and alignment between countries cannot be taken for granted. The finance relationship with the US remains vital, and it will always matter, but growth, investment, and innovation are increasingly driven by Asia, the Middle East, and developing markets. And perhaps most of all, by the connections between them, the trade and capital corridors that link regions together. That puts a spotlight on collaboration. And the UK has a distinctive position. If you look at the US, it is certainly a global financial centre, but it is mainly focused on the US domestic market. Europe is very financially fragmented. So centres like London, which have global reach but aren't reliant on the home market, play a different role. And at the same time, Singapore and major hubs in the Middle East are shaping growth in their region, and Japan is becoming more important again from a geo-economic perspective. So we see new financial centres emerging, and they face the same issues, which is no surprise: trust, regulation, people and infrastructure, digital finance, sustainability, and long-term investment. And that's what this panel is about. We'll look at why collaboration between financial centres matters more than ever, and how banks, firms, and advisors connect markets in practice. And where working together, especially on digital finance, AI, and sustainable investment, can deliver real value. So Miles briefly introduced the panel, and I'm going to use an opening question to give them a chance to say a little bit more about what they do and hopefully answer my question, which is good luck. Right. So in this very politically fragmented but financially connected world, where do you see the best opportunities for collaboration between international centres rather than seeing people compete? Shall I start for you? You're looking me straight in the eye. Go on, Patrick. Off you go.
Oh, okay. So I think in this fragmented world, right, as you rightly mentioned, we need to get all the like-minded financial centers together and work together, to find more collaborations together, to build something together, which we are actually doing, because I'm from Singapore. First of all, I'm Patrick. I'm from Greenlink Digital Bank. So I'm from Singapore, and Singapore already working with UK on a lot of projects like Project Guardian, on a lot of like this kind of like cross-border, projects together. So all this, we just need to bring them into production, right? Like to deploy them into production and make them live. Yeah.
So if I build on Patrick's point, so I'm Cora McLaren. I support large corporate organisations in the UK expand to more than 50 markets around the world. And I agree entirely with what Patrick said. There is a significant opportunity for the UK to grow by enabling corporates, mid-corporates and small businesses in the UK to expand their supply chains globally, but also to compete globally. And it doesn't enable that expansion to have competition between financial centres. What really works for them is understanding where is optimal for them to expand into. And Edward did ask us to be brief in this point, so I'll touch briefly on our trade sentiment survey. These become dated very quickly in the current world, so ours is thankfully just 2 weeks old. And it talks about how businesses are increasingly, about 80% of them, seeing the current environment being an opportunity to reposition themselves, not retreat. So perhaps our role is helping them reposition themselves and then move forward.
Go.
Thank you. I'm representing Jersey Finance. We're the industry promotional and representative body, and many people in this room will be familiar with Jersey. Despite some of the earlier discussions, we're still seeing lots of global investment, and international finance centres provide the base for that global capital to shift where it needs to go. And we promote Jersey using a lot of the terminology that Chris used earlier on about stability, certainty, good legal system. Probably the little advantage we have on you guys is that, touch base, we've been politically stable for quite a long time. And despite the fact that we have an election coming up this year, we hope that political stability will stay. In relation to international finance centres, we've had the view for quite a number of years that the days of one centre being all things to all men are gone, that the demands of our clients are much more complex, the asset base is much more complex, the opportunities are much, much bigger. And as a consequence, the client ultimately determines, with the right advice, what centres they should use. And for us, it's important to make sure that our proposition is understood. And we accept that, of course, there is an element of competition, but actually we also need a lot more cooperation, and we can talk a little bit more about what we're actually doing on that base. As Miles said, Jersey Finance is a member of TheCityUK for many years. We collaborate with TheCityUK on a number of different projects. And indeed, London is essential for us as an international finance centre, because so much of the business that comes through London, comes through Jersey, is advised through London and vice versa. And a lot of the investment coming in to the UK comes in via Jersey and some of our structures.
We'll come back to that. Janina.
Thank you very much. I'm Janina Heinz. I'm a financial services regulatory partner at Freshfields, and I also worked at the European Central Bank for a while, so I hope to know that I still know a bit how the European institutions work, which may be relevant for our discussion. When I think about opportunities, I think that we should not necessarily look for opportunities in terms of the rulemaking of access, at least coming from the European perspective. I think Europe for now has chosen to pursue, for example, legislation which is more protectionist in terms of financial services. But where I think opportunity lies are the technical aspects. So when I look at the central banks, for example, I think there's a lot of interest in Singapore and the digital environment there. And I think also when looking at the environment between regulators and banks in Europe, always when it's around developing technical capabilities, thinking about interoperability going forward, when we think about tokenization, I think there is a lot of openness to see where you find alliances. So that would be, for me, an area of opportunity, really.
So staying with you, what about the risks? And do we need more than just global in terms of regulation?
I think, we have touched upon this throughout the day. I simply think that there is not so much opportunity for global at the moment, and it does pose a risk, and I think it also is a cost driver, because I think being protectionist in an environment that operates on a global level, financial services is a global environment per se. It brings with it, first of all, cost, because what I at least experience in the EU is that where there is a global operation, the EU wants to make sure that there is no risk to the EU coming from that global environment. And I think when we talk about risk, I still have the trust that colleges and so on and so forth, that actually still works. So people are still communicating in that environment. So I hope that this part of the risk is contained. But at the same time, there are so many moving factors. I think the industry is quite wary of how things are moving. And there is a lot of talk around to what extent do European institutions, European economies rely on certain services that they are receiving from other jurisdictions. And there's a lot of regulatory scrutiny around that. So I think in terms of risk, a lot of work goes into that. And it's a bit hard to see really the resolution of it.
Yeah, and in the meantime, the global-local piece just increases costs, you rightly say. Joe, Jersey's been working with London and many other centres for a long time. How are you seeing that cooperation changing in today's environment?
I'd say, if anything, it's probably strengthening because certainly the centres that we deal with have the same pressures as we have here. And I think that our view in Jersey has always been we need to operate to high regulatory standards. Part of the reason for that is because we're a small centre, we're judged differently to big centres. So, for example, if there's a problem with an institution in Paris or Frankfurt, notice I haven't mentioned London, that's a problem with that institution. If we have the same problem in Jersey, it's a jurisdictional problem. So for us, we're judged by much higher standards. As international regulators are checking what our homework, and they have a predetermined view. So we're on the back foot before we start. Now, thankfully for us, we get strong, good, clean bills of health, but it demands a lot of work. But for us, we don't have an option. We can't get a bad result because it'd be a big impact on us, much more so than other centres. Because the clients that we deal with, the large families, the ultra-high net worths, the institutional investors, they want to deal with jurisdictions of good quality with a good reputation. And for us, managing that reputation is extremely important. And as a consequence, whilst it would be nice to be able to relax a lot of the regulation, we have to keep it in context.
Helpful. Cora, can we go back to and build off what you were talking about earlier? Mm-hmm. If you look in a slightly more granular way at what how clients are actually using multiple financial centres. Mm-hmm. First, could you give an example of that? And secondly, what does it tell us here about what they expect of London, which they may or may not be getting?
Certainly. My sense is that the role of international financial centres is shifting a little. So I think previously a view of Hong Kong or indeed Singapore might be an entry into. And I think that certainly still remains the case. So Hong Kong would be a great example of an entry into China, very specifically the Greater Bay Area, but also beyond that. And there is both regulation and incentives to support corporates and other entities entering that, similarly for Singapore being gateway to ASEAN markets. But I think the role is emerging to be much more super connectors. And so I see greater connectivity between Hong Kong and, say, Singapore in a client strategy to enter all of Asia. And so they will be looking at not only where does it give them market access, increasingly where corporates are expanding is to capture technological advances or to grow their business and their resilience of supply chain rather than market share and customer growth. Indeed, that's actually moving more quickly. And a client I was with just last week has entered Asia by acquiring a business that is actually cementing their product and their distribution. And they are choosing both to operate in Hong Kong as well as Singapore. And they're doing it both for reasons of operational resilience, but they're also doing it because they recognize that they're robust centres with a very clear rule of law and good partnership with the UK. So just in closing on that point, what can London learn from that? I think it's not only London being this centre for expansion into the UK, but when the Secretary of State was talking this morning about connectivity with Europe, for example, corporates investing into the UK, seeing London as a partner and expansion opportunity into Europe and beyond.
Very interesting. So we've been talking about collaboration. We're going to move now to digital finance and AI and so on. And the third mini section of this will be looking ahead in the future. So Patrick, you are one of 4 digital banks in Singapore.
That's correct.
You're profitable.
Yes.
And we're the first to be profitable. Congratulations.
Thank you.
How is Singapore positioning itself as a centre for fintech, digital banking and AI? And what is it which really makes it work? And how does that play into firms who want to build and scale responsibly?
Sure, thanks for your question. First of all, before that, right, I forgot to ask, has anyone here heard of Greening Digital Bank before, prior to this session?
No, I think it's a gold. Okay. I think you've got a golden advertising.
Yeah, because even if I ask this question in Singapore, not many hands would be raised. So, as you rightly mentioned, right? So we are one of the 4 licensed digital banks in Singapore, and we are the first profitable one. The reason why when we talk about innovation, when we talk about fintech, I highlight that, emphasize that we are the first profitable digital bank. First of all, it's quite difficult to be profitable running a digital bank. I have set up 2 in Hong Kong before, and
just to interrupt you on that.
Yeah.
You run your own data centers.
That's right. So I even the reason why, because we leverage on the the fintech, the technology. We are the only digital bank having our own GPU powers, okay? And that's why we are also the leading bank, AI digital bank, joining the MAS Pathfinder AI program as the core member. And that's why I'm here today, to be honest. And then, and that's why, I can, from digital banking perspective in Singapore, I can share more about, like Singapore, what's the advantage, in Singapore? I'm not a regulator, but, from a digital banking perspective. And so Singapore, I think the biggest differentiator, right, the advantage, why, we built a digital bank there, and why I'm working there, from Hong Kong, is because they have very clear regulations. And clear regulations, you may think, oh, come on, regulations always stop innovations, right? And no, it's not the case. I always treat, a clear regulations to be like a seatbelt, right? When you drive, you want to innovate fast. You need to have a really safety, have the seatbelt, right, when you drive fast. So I always treat regulation as the seatbelt when you drive a car, when you want to drive fast, right? And that's one of the advantage in Singapore. And also they have a very good programs, like initiatives from the regulator, like MAS, like Pathfinder AI program, as I mentioned. And that really helped, because a lot of the FIs, to be honest, they really don't know how to start building their AI capabilities. They simply don't know, right? Because the AI, the adoption rate, as we all know, from the one of the latest McKinsey report end of last year, adoption rate is very high, right, 88%. But the scaled rate is still 30-ish%, right? So in order to really scale it, right, so they have this Pathfinder AI program where all the FIs, they can basically join there and then to share, to get their pinpoints on the platform. And then, we basically form a network right there. And then like for the pioneers, for the FIs who are more advanced in AIs, can go and do the sharing on how do they build such AI capabilities. So a lot of this we found is very helpful, right? And I see that's the advantage of Singapore. That's where I can speak from on the ground, from digital banking perspective. And sorry, last point is that why profitable is important, because profitability will make innovation sustainable. Because if you just do innovation but you don't make profits, it's not sustainable. You just burn money to do the innovation. That's not going to last long.
Yeah, nothing's changed on that one, that's for sure. Staying with you, if you turn the clock back from as you shifted from startup to scale to where you are today, what was it which was most important to you? Was it what you've been talking about, or was there something else as well as you made that shift?
Okay, so from digital banking perspective, definitely when we look at the customer segment, we keep we are a Web3 friendly digital bank, right? So we have our stablecoin tokenization platform. We are applying to be the stablecoin issuer when we talk about tokenization earlier. And of course, pending mass approval on that. And we even have our digital trade token, etc. Right? So all this Web3 technology, we have this all ready. And also, because we know Web3, right? So majority of the Web3 licensed Web3 players are our customers in Singapore. And that's how we are profitable, at such an early stage. Probably one of the fastest profitable digital bank in Asia. Yeah.
Very interesting. So I'm watching the clock, and I'm going to start blending things together, and the seamless piece between digital and the future is going to be very seamless. So I'm going to come to you, Janina. When you look at Singapore's Project Guardian, is that a new model for cooperation?
I would certainly think so. At least that's also
maybe you could sort of expand a little bit.
That's also what we are seeing in practice. I think when we think about technology advances, if we have the advances only in silos, we will not have the interoperability that is needed in order for all players feeling comfortable to scale up. And I think we also see certain in between things at the moment, where we do have digital advances and where there's always an API then to potentially also the old world. But I think Singapore is at the forefront of potentially having a standard which, if others are willing, could be adopted more widely. And as I said, what I am seeing in the industry is that central banks are looking at that, are trying to find cooperation there. And I think that would be a productive and constructive way of ensuring interoperability at an earlier stage, if compared to a situation where not developed in cooperation.
Yeah, I agree. Just to supplement more, right? Like any form of tokenization, especially nowadays, we talk about RWA tokenization, all this. To me, as from digital banking perspective, these are more options for the digital bank to offer to our customers, right? To more products for them to invest in, right? Which they, used to, cannot really invest in some like products. So that's to us, that's the biggest point, right? And also, you mentioned about API. We for Greening Digital Bank, we have the open API, open banking capabilities, right? Definitely, we can collect everything via API. And also, in terms of innovation, tokenization, we cannot do all this silo, as you mentioned. Has to be cross-border, and be it the stable coin. We are participating in the mass Project Bloom, which is basically leveraging stablecoin, licensed stablecoin, to do settlements, US dollar settlements, cross-border. So without, working with a partner in a cross-border jurisdiction, how can we, do this, right? And then, I totally agree with you that all this needs to be standardized, to enhance the interoperability. And yeah, that's something I just want to supplement.
But just on tokenization, I think the reality is that the fund sector particularly, we're seeing lots more tokenization of real world assets, and a lot of fund structures are tokenized structures. So we have some really good, actually, regulatory guidelines in place, and we're winning business off the back of that. And we think that the tokenization of the fund sector is going to have a major impact. It already has had, but it will continue into the future.
So I'm putting words in your mouth, so correct them, please. So when you look at digital, you're really looking at it as to what regulations do we need on the ground to make the most of what's happening elsewhere, or how are you thinking about it?
It depends on how I'm thinking on that day. But if we just talk about tokenization, that's very much how the assets are managed, if you like, within the fund. So that's a sort of a, instead of, what it does to a fund, say, if you look at a property fund, if the assets are tokenized, it means that it becomes much more liquid. It means it becomes much more efficient in terms of transfers. So that works quite well. In terms of digital assets, again, it depends on the asset. It depends on who is managing that asset, what they look like. And one of the things that we have done in the last 12 months, a little bit longer, government did a lot of work on the competitiveness of the industry and what we need to do to make sure that we move forward. And whilst we have been doing quite a lot of work in the digital space, a lot of it is below the radar. So we have now got an innovation council, which is mainly government and regulator from a policy perspective, working with industry members who want to do something innovative to try and make sure we've got the right guardrails in place. And one of the advantages that we have as a small centre is that it's very easy for us to get government, industry and regulator in a room to hammer out the issues and get a solution at the end of the day without compromising on standards.
Brilliant. Right, I'm going to come to questions in a moment, but we had a little chat outside, and I now can't find Edouard. There. Edouard Laurent, who's the first Secretary for Financial Affairs at the Swiss Embassy, very kindly said he would say a couple of words on the back of what we've been talking about and the importance of the UK-Swiss relationship.
Thank you very much. Thank you very much. So I just wanted to share a few thoughts on the cooperation between the UK and Switzerland, and what made it possible, what made also the Bern Financial Services possible. And as you know, we have two financial sectors in the US, in the UK and Switzerland that are quite complementary, with wealth management in Switzerland and insurance in the UK. And to better connect them, we had this idea to develop the Bern Financial Services Agreement. Now it's in force, and we have heard from the Secretary of State that what matters, of course, is that it's being used. And we had a good start with more than 20 companies using it and many more trying to register. So what made it possible is first and foremost trust. Trust between the government, trust between the regulators, because we rely on the FCA to supervise British insurers accessing the Swiss market under the BFSA. So trust is absolutely key. And we have heard of this era, the erosion of trust that is happening in the world, so I would like to stress that point. And we are now deepening this relationship we have with the UK by modernizing our free trade agreement, including some services in it. So that's only one part, the BFSA is only one part of this relationship. Just to conclude, the three most important factor, I believe, is this complementary, the shared priorities, and, of course, trust. Thank you.
Trust. It is the fundamental, isn't it? Right. Who wants to ask the first question? I cannot believe this silence.
Oh, there's a hand.
John, I'm coming to you. Right, in the back. I say, John, I'm coming to you if there's silence. In the back.
Hello, I'm Chris Bernard from Freshfields, like Janina. And I have a question about you were talking about the need for cooperation, interoperability, how silos actually are not conducive to sort of building some of these innovative areas like tokenization. But we heard earlier about regulatory fragmentation, how the world seems to be moving away from that. Do you see a tension in that, and how do we resolve that?
So Cora, I didn't ask you a question very close along that line, so
Yes.
over to you first.
Yeah, so very, very happy to talk about that. And I love the points you were just talking about, the importance of building trust in building collaboration, because it's very easy to talk about international financial centres as if they're an amorphous mass, and amorphous masses or faceless bodies don't interact with faceless bodies. So where I see it really come to life is by person-to-person interaction across the political sphere, across the governmental sphere, and across the regulatory sphere. Where I've seen it work incredibly well is in areas such as tokenization, which doesn't mean a great deal sometimes to the businesses that we're talking about. I see it as our privilege and our responsibility to make that easy for entrepreneurs so they can understand what is the benefit to their business and how does it fit with their business plan, because it isn't an end in and of itself. I think it's also then important that we use our platform and the relationships we have to be able to engage with government and be the voice of business and talk about what's really important to them, but also engage with regulators so the regulation is working for the entrepreneurs that operate within it. Finally, the point that I would make, and I talk about it actually being HSBC's secret sauce, is we need to collaborate ourselves across jurisdictions. So if I have a corporate that has an interest to enter the market into Singapore, I need to know who I'm talking to, and then I need to trust that they have the ability to help introduce them to the business ecosystem in Singapore, such that it helps them achieve what they want to. So I think it's absolutely fundamental. And I tend to be a bit more of an optimistic in maybe quite a gloomy world, that I think collaboration and trust is something that can be created and can continue to grow.
Great answer. There.
Hello, thank you very much for sharing. I have a specific question about the GreenLink digital bank, and it's fascinating how you think you need to have your own GPU power and have the AI capacities. So I'm wonder whether you can share a bit of an example of what kind of AI did you use in your business case, and when you interact with mass or interact with, you might be expanding jurisdiction now, interact with different jurisdiction regulators. What's their attitude? And maybe for the panel, I'm also interested from different angles. When you think about the seat belt and the growth, from your different angle, where do you see the balance and where we are now?
Okay, thank you. Very good question. After I go back, right, return from my UK trip, then there's already scheduled a meeting with the MAS, right, the supervisory team, to report on the progress on everything, in terms of the business, the technology, etc. So, good question. To answer the first part of your question, right, the reason why we have our own GPU power, right, is because for us, we are a licensed bank. And for any licensed bank, the data privacy, is the most important, right? The confidentiality. So that's why we are running everything on-prem, including the GPU powers, and also with the latest the LLMs, like Gamma 4 from Google, and all the latest LLMs you're running on-prem, right? Locally. And that's how, because we see that we will need to have our own computing power, and also something, is actually, I have done some calculation, right? If I'm not running this on-prem with our own GPU powers, right? If running on any cloud, GPU powers, it's way more expensive than, running on-prem, right? Especially when we talk about vibe coding, nowadays, I have enabled all the staffs to have the vibe coding capabilities for all staffs in the bank. And imagine if everyone using vibe coding, imagine the number of tokens being consumed. It's very expensive, trust me. And if we're running it on-prem, with the local LLMs, with our own GPU powers, it's way cheaper this way. Okay, so that's why we can build a lot of other tools, like be it the AI tools, any AI agents, ourselves. That's one thing. Then link this point to the latest pilot that I'm working with MAS is also part of the Pathfinder AI program, is that we are also working on the agentic payment. agentic payment as well. So that also requires a cross-border, instead of silo, how can I, agent-to-agent kind of payment, so that we can, first of all, define all the KYA standards, all this, it can be done, via this. And so again, this will be something that actually I'm partnering with, HSBC on that. But that's domestically, locally in Singapore. But it will makes much more sense if we can do it cross-border payment, agent-to-agent kind of payment, right? And everything will be showcasing in the upcoming Singapore FinTech Festivals. So for any of you who will be traveling to Singapore, please come, look at this, after this pilot completion. Yeah.
Great invitation. Do you want to add?
I'll make a very small point. Again, the recent study I saw that we published is more than 90% of firms recognise that AI is going to radically transform their business, but less than 40% have a strategy for that. So to your point around regulation, I had a wonderful conversation over breakfast with someone who I know is in the room, and we were talking about, is AI a positive agent for change and efficiency within businesses, or is it a threat from a cyber and an operational resilience perspective? And the answer is probably both. It's not my area of expertise, so I'll stop talking so confidently about it. I guess what is more within my area of expertise is that organizations such as ours have the ability to connect clients and enable conversations so that we can get to a better and more robust outcome, so we get the right level of seatbelt, but it doesn't, doesn't constrain opportunity and growth.
Brilliant. Can we go over here? Do you want to just say who you are and where you come from?
Sure, thank you. Christine Moran from Amundi. Amundi is Europe's largest asset manager. So my question is philosophical, and and it's in terms of the regulatory environment. We historically think of the regulatory environment in a number of lenses. The country, as in the UK or Europe or Singapore, the legal entity, the firm, its permissions, its licenses, and then down to the individuals, whether it's a board of directors or a set of SMFs. But how fit for purpose is that framework in 2035 or 2040, etc., with the world of agentic AI? Because ultimately, the firms, the permissions, the rule books, all of those will be not just disrupted, but to some extent irrelevant. And you'll have we'll have transversal, whether it's Claude or whatever the next things, which are not bound by any of the frameworks that we operate around.
Right, I think we probably need an entire afternoon on that one. But Janina, do you want to frame it?
Well, first of all, I think Europe started it, and that's the only place I can comfortably talk about, of having an AI framework as well. And I think it will be seen to what extent we adjust that. I think at the moment it is still built on a human element, or the regulation places an important factor on that there is a certain level of control still with a human. So I think there are certain decisions that we as a society also need to make around how comfortable we feel with the technology advances that we are going to see. But I think at the moment it is when we think about financial services, we have our regulation, and then when we think about AI, we start to have AI regulation. And at a certain point, I think those might merge closer together. At the moment, we are still operating in a world where regulators would say our regulation, financial service regulation, is technologically agnostic, and try to build those parallels in an old world and in a new world. But I think we have to decide on how we want to define accountability going forward. And I can't give you that answer, but I think that will be the focus area of regulation around accountability.
Does anyone want to add anything? If not, I will.
Sure, just to supplement, to echo your point, right? Accountability is very important. That's why no matter what we build, when we build all the AIs, we must embed with all the, the guardrails capabilities, and to enhance all the explainability and the traceability, right? Basically, in short, and at the end of the day, accountability, we always, because I have, created these AI capabilities to all the staffs in the bank, but we, up front, we let all the staffs know that, they are the ones who's accountable to all the results, right? Cannot be at the end, there's something wrong with, a report's being generated wrong and submitted to regulator and then blame is the AI issue, right? Cannot. So they have to be, like the human, ultimately to be responsible. And in order to do that, we need to have all this traceability, everything put in, like in the audit log, right? Understanding how the results are being came out this way.
Yeah, I think it goes back to the point made by one of the gentlemen, the importance of trust. And you can't blame AI. We have to be able to trust it, and that's going to take a bit of time. Yep. And trust has been mentioned a few times, and it reminds me, I was at something a couple of weeks ago, and Dr. James Mwangi, he's the group CEO of Equity Bank, and he said, trust is the currency of financial services.
Hear, hear. Right, John. You need a mic. It's coming.
I had a sort of John Cook from the TheCityUK. I had a kind of related question. All the terminology that has been used in this discussion shows just how much innovation is coming down the track, and it will all call for cooperation between regulators. Yet, there has been a bit of a history of regulators cooperating by holding meetings at which they survey what has gone wrong and compare notes on it. How can we do more to get them to take a forward-looking approach and cooperate with other regulators in trying to see that when new rules are introduced, they will avoid as far as possible conflicts and the kind of difficulties that can arise of that kind?
Thanks, John. I think that's another one we could spend half a day on. Has anyone got a one-liner they want in response? Who wants to go first on it?
So I'll try and keep it to one line, but it's difficult to do so. So I will quote Joe a little, which is, in smaller jurisdictions, it's easy to get access across regulators and government. In larger jurisdictions, it's somewhat trickier. But I do think speaking with as much objectivity and care and ultimately focusing on what is our aim as an organisation, which is both balancing the needs of the firm, the shareholder and our clients. And at times by bringing to life the entrepreneur's experience and then setting that out for regulators and indeed government becomes very important, particularly if the entrepreneurs themselves can't en masse present that view. But I also think we can add value by creating forums and allowing that to happen and then demonstrating it through either real life or emerging life as it plays out.
And I also think a common theme today has, or one that shone through a little, I think, was that we might need to think about cultural shift, at least like me coming from Europe. I think that is something that we have seen emerge more and more in the debates, maybe starting very prominently with the Draghi report. I think we need to accept more risk, because your point that you were making, if we only look back and look where mistakes have been made, I think the reason for that is because people for a long time were just looking for safety everywhere, and I think we can't allow it in this world at this moment to hold us back from everything. But as a society, I think we need to accept maybe a higher degree of risk to a certain extent and enable that kind of cultural shift then also within institutions.
And I think that industry and politicians need to give the regulators a bit of cover, because as soon as anything goes wrong, everyone dives on the regulator. So if I'm the regulator, why would I take any chances? I think that's a key point I feel that needs to be taken into account.
I think that is a very good place to stop.
Mike. So I've got a comment on the question. The comment is you can't stop because the next speaker isn't here yet.
Oh, excellent. we can keep going for a long time.
But he is apparently about 5 minutes away, which
I was watching this clock and it sort of kept on resetting.
Inflation has been hitting the timer for the panel, I think it's fair to say. But that does give me time to ask this question. I'm told he's about 5 minutes away, but it does give me time to ask this question. So it's been an absolutely fascinating discussion. I think one of the things that really touches on this, though, is that in an era where we are as has come through from the conversations so far. In an era where we are moving towards greater fragmentation, greater populism, far less internationalization and globalization in regulation. What is the role for international financial centres, firstly, to continue to make the case for these sorts of standards, because our industry is probably the most internationalised of any industry and is dependent on these kinds of flows. I mean, if one looks at Singapore, and one of the advantages for Singapore is how open it is, which is one of the big advantages the UK has got. The UK-Switzerland example is agreement is an example of this. So that's the first part of the question. But secondly, what are the ways in which we can support on a bilateral basis and create those sorts of relationships that we can then use to use as benchmarks, because we're moving from a multilateral world, which is always bilaterally implemented anyway in many cases, to what's going to be more of a bilateral set of relationships.
Who wants to have a crack at that?
So I'll start, and I'm trying to navigate how I say it without being too provocative, because we only have 3 minutes left, and that would ruin everything.
No, don't spoil it. Go.
So I'll give an example of just in the last year, we led a client delegation from the UK to China and to Hong Kong. And so to the point around fragmentation, and dare I say sometimes firmly held views based sometimes on lighter information, not only was the delegation around, as I've talked about, immersing entrepreneurs into business ecosystems, it very helpfully brought together UK ambassadorial presence, Foreign Office and DBT presence, as well as entities within Hong Kong, as well as some of the government, as well as superbly many professional firms that are represented here. And I think sometimes there is an element of not only operating at a government level and engaging in some of that negotiation, but actually making the change happen physically by expanding the breadth and the experience of UK entrepreneurs and then amplifying that as an example. And so this afternoon, I'm going to be welcoming a delegation from China, which is essentially doing the reverse. And some of the entrepreneurs who came with us will be at that meeting sharing some of their experiences. So I think creating the ecosystem and then letting it do its thing, letting the business and the growth happen, and then sharing those examples with regulators and with government agencies so they're able to see how that collaboration can be brought to life. That wasn't too contentious, I don't think.
I think that was very impressive.
Yeah. I would just say it's engagement, really. And I think that for us, again, operating on a much smaller scale in the UK, but if we've identified a jurisdiction that we believe represents opportunity for our industry, and we believe we need government support or we need regulatory support, we get them involved. And we work at all levels to try and ensure that the proposition is understood and that there are opportunities for us to work jointly. So we have relationships with a number of international finance centres through the World Alliance, but then Jersey, we have a close relationship with DIFC, for example. We signed a memorandum of understanding with them. A few years ago, we ran a couple of family office events, one in London, one in Dubai last year. And whilst we might be competing on the fringes, we're all serving, in many cases, the same customer base. And what we want to try and ensure that we can be seen to work together to deliver for the benefit of the customer. And if we are at loggerheads and totally competitive, the customer ultimately loses. In addition to that, we have worked very closely with the Kigali International Finance Centre for lots of reasons, historic reasons I won't go into, the relationship between Jersey and Rwanda. But we've assisted their growth in terms of their legislation, in terms of their regulation, helped them with steers on how to deal with financial crime, right across the board. Commercially, is there anything major in this for us? Not a lot. Mm-hmm. But if we can have another good quality international finance centre that is operating to good standards, it gives us a lot of opportunity, perhaps, to use those centres for our clients who want to invest in Africa. Oh. So I think that it's to be open to the discussion, I think is really important.
Yeah. So if I could abuse the chair's position and have the last word on this, I would say if I listen to what's been said, and it's come out 2 or 3 times, and if I think back to what has worked best in various parts of the world in recent years, it's been that collaboration between business and government to work out what the problem is, come up with a solution, and responsibly deliver on it. And there's some really great examples, including here. you were talking, Patrick, of what you're doing with Singapore, and it rings loud and true. It's that partnership between the two, and if we get it right, it's really powerful. So I would like to thank the panel for brilliant contribution. Thank you.